Hey, what's up everyone? This is Silver Slayer. Thanks for tuning in and welcome. We got another critical video we're going to break down today, folks. You cannot be blindly investing and expect success. It's not realistic. When I tell you to subscribe, it's not because I want more subscribers. I could care less. It's for the sake of you getting this daily dose of information. It's vital. Now, this article is incredible. It's long, so I'm going to highlight the main parts. I'm going to summarize, but it is jam-packed full of very, very good information, a lot of points, and it's very diverse. It's talking about the monetary logic for gold and silver. The link will be in the description. I'm going to be skipping over a lot of stuff. Trust me, it's very, very long, but we definitely have a great video today. I mean, just to real quick show you guys this, it covers a lot of stuff. There's one paragraph in particular that caught my eye that we're probably gonna stay on for a while. They're talking about the replacement for fiat currencies, what a new digital money would be like, and how silver's incorporated in that. And it's just a very, very great, it's a great article. It talks about the dollar's debasement, what's going on in our financial system, and what role gold and silver plays, in between that. So great video, great article. I'm excited for this video. Let's jump into it. So equity markets, they rallied strongly, ignoring rapidly deteriorating fundamentals, and gold slumped on a minor recovery in the dollar's trade-weighted index. We know the dollar is directly correlated to gold and silver. When the dollar index is up, gold and silver is down, vice versa. That's why the gold slumped on a minor recovery in the dollar's trade-weighted index. So since we know those two things are correlated, when we throw out these trillions of dollars for stimulus, it's going to hurt the dollar. So we can literally guarantee precious metals will be up during that time frame. Now, it is a common misconception among monetarists that the relationship between the quantity of money and its purchasing power is the only determinant of the relationship. And that's definitely true. I mean, when quantitative easing happens, QE, when we're talking about stimulus, when we're talking about throwing all this money in, it has to come from somewhere. But we also have to print all this money to catch up. Printing all this money is what floods the dollar, makes it, oversaturated, just makes it very watered down, which hurts its purchasing power, and then we have this sinking ship that cannot be fixed. I mean, think about it. We're trying to replace our debt with more debt. It's like trying to pay off a credit card with another credit card. Is going to catch up. There's a cost to pay. That money has to come from somewhere, and we do not have it. It is impossible to forecast when the collapse of fiat currency will happen, other than to note the factors involved, which is a great point, because I want to see the factors that they're talking about. There's many different factors on the table. I mean, not only is stimulus going to play a huge role, but like in the video I talked about earlier, the vaccine even, right? When Citibank was talking about the dollar falling or the dollar hurting 20, they said the dollar's going to be down 20% in 2021, but this is from vaccine stuff, not even talking about the trillions of dollars we're going to throw out. So a considered reflection of current events leads to only one conclusion, and that is accelerating inflation of the dollar's money supply is firmly on the path to destroying the dollar's purchasing power completely. Now, the dollar's purchasing power goes down every year, just like back in the day. 20 cents get you a gallon of gas, right? Cigarettes were like $1 a pack, now they're like 11. What you can buy today will not be the same in 20 years. So if you have $10,000 in your bank account right now, in 10, 20 years from now, that $10,000 will only be worth about as much as $1,000, $2,000 is today. So that's why you don't want to keep your money in your bank account. You want to transfer it into something that holds its value, that has intrinsic value. So this article looks at the theoretical and empirical evidence from previous fiat money collapses in order to impart the knowledge necessary for individuals to seek early protection from an annihilation of fiat currencies. It assesses the likely speed of the collapse of fiat money and debates the future of money in a post-fiat world, in which the likely successors are metallic money, gold and silver, and some would say cryptocurrencies. And I've honestly been on board more with cryptocurrencies, Bitcoin in particular, than I used to be. Well, then you guys know, a couple of years ago, I was all in on crypto, and for many reasons so, and I made a lot of money. I made around $60,000 in a year. And if you think I'm lying, I literally have the videos on this channel. Just go back a couple of years ago. I showed you guys every single video from my first video announcing I was going to start investing, my first purchase on Coinbase. And over the months, you could see me just making more money, right? And you could even see my wallets with that amount of money in it. So I'm not lying. I made a lot of money with Bitcoin, but then it crashed, right? And I didn't think there was much hope for it. There's too many altcoins. It's in a very rough draft stage. But looking forwards, if they fix some of these things that are wrong with it, if they find a way to stabilize it, to make it to make it more of a structured type of system, then it definitely is possible. I mean, think forwards. If we're going to have a new type of money, it's probably going to be digital. Think about it, right? Cashless nations, cardless ATMs, Bitcoin ATM, everything's digital now. Swipe of a card, right? Pay from your phone. It's all digital. So only a digital currency would make sense. But also things that hold value. You can't print gold or silver. You can't print it out of thin air. You have to dig it out the ground, and there's only a limited supply, and it's been valuable for 5,000 years. So these three make sense. Early action to lessen the impact of a failure of the fiat regime requires understanding of the role of money in order to decide what will be the future money when fiat dies, which I was kind of just explaining. I kind of explained the principles behind money. Money is something that cannot be created nor destroyed. Cryptocurrency is a little bit of a different type of category, but that's definitely the principle. It cannot be created nor destroyed. It has a medium volume of exchange that can be interchangeable. There is no Bitcoin of China. There is no Bitcoin of USA. Bitcoin can be traded globally, instant, zero to little fees. It's like everyone speaking the same language on a monetary form. Think how beneficial the world would be if everyone could speak the same language. That's how Bitcoin is in money. So, will we be pricing goods and services in gold or crypto? Will gold be priced in Bitcoin or Bitcoin priced in gold? And if Bitcoin is priced in gold, will its function of a store of value still exist? I can answer a little bit of these questions. I know you probably say, how can you answer this question if these guys are asking it? But here's the thing. I have a lot of experience. And I'm a very humble guy. When I say this stuff, I'm not trying to be all, oh, look at me. No, that's not. I'm telling you this because I have information that could be valuable. Now, there already is Bitcoin backed by gold and gold backed by Bitcoin. I mean, look at a lot of these altcoins that you can trade the coin in for literal physical precious metals. So there's already this type of fundamental starting to exist, and it's probably just going to become more relevant. Later on, I'll talk about what form of money I think will be next and my reasoning why. I'm pretty confident that this will be the new form of money after the dollar is destroyed, but you got to stay along for that. So introduction. This week saw the news that a vaccine had been found to combat the virus. At least it offers the prospect of humanity ridding itself of the virus in due course. But it will not be long or not be enough to rescue the global economy from its deeper problems. Monetary inflation is therefore far from running its course. And this is the thing. People have no idea about this stuff. They look at the virus as the biggest problem. And a lot of people don't even realize how much. But here's the thing. That's not our biggest problem. People don't understand what's going to happen when we throw out this money. They think America's rich. They think that we have all this money to throw out and they're going to get this paycheck, maybe even a second paycheck, and it's going to be great. They don't understand how catastrophic that is for the economy, for our financial system, especially since the USD is the world's reserve currency. And here's another thing. The only reason America's the richest country is because we own the most gold. That's the only reason, and that's literally the only reason, because we own the most gold. So compare that to us. You're saying if some guy has $10,000 in the bank account, but I have gold, you're saying that I'm wealthier than him? That's what we're saying, yeah. The reaction in financial markets to the vaccine news is contradictory. Equity markets rallied strong or strongly ignoring rapidly deteriorating fundamentals, and gold slumped on a minor recovery in the dollar's trade-weighted index. Rather than blindly accepting the reasons for outcomes put forward by the financial press, we must accept that during these inflationary times, markets are not functioning efficiently. I mean, we can't think of a stable market during unstable times. There's going to be a lot of instability because the economy isn't stable whatsoever. To obtain a grasp of what is truly happening in capital markets, it is usually best to stand back and observe the broader context. Figure 1 below shows the course of the 3 major indicators this year. S&P 500 as a proxy of stock market, copper price as proxy for industrial commodities, and gold as proxy for monetary inflation. So they're going to go on to, talking about, the dates of what's happening. Federal Reserve cuts its bond rates to 0 on March 16th. March 22nd, what the announcement led to, the threat of infinite money printing, blah, 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 what that would happen, the consequences. So this is a little history day, the evolution of money, how it started, what the medium of exchange was back then. Back in biblical days, Egyptians, they saw silver as magical because it could purify water, responded to elements like no other metal. The gold to silver ratio was 2.5 parts silver equals 1 part gold. So silver was very valuable back in the day. It wasn't until 1930 when FDR changed that ratio from 16 to 1 to 75 to 1, devaluing silver, basically. But then they talk about the denarius, all this. But let's get into stuff. I'm never going to talk about stuff you don't need to know. It's interesting to know this stuff, but you don't need to know it right now, right? This isn't going to help your investment right now, stuff that happened couple hundred years ago. So on this channel, I always try to bring you stuff that you need to know right now. And so let's keep moving on. So the outcome of monetary debasement. This is stuff you need to know. It is a common misconception among monetarists that the relationship between the quantity of money and its purchasing power is only determinant of the relationship. There are 2 other important factors involved. 1, the factor that additional money takes time to be absorbed into circulation with consequences, and its purchasing power is also determined by changes in the public's general preference for holding money relative to goods. The temporal shift in the first factor has important effects, in particular transferring wealth from late receivers to early receivers of the additional currency in the Cantillon effect. So this is going to be interesting because even when we do print more money, it's not just gonna make everything better. It's actually going to make things worse. And the importance of the second fact can be illustrated by what happens when the general public realizes that all hope of recovery in money's purchasing power must be abandoned. The dollar is literally only as strong as people think it is. So if people start to think it's not strong, it literally isn't strong. If people start to think it's not worth much, it literally isn't worth much. And that's dangerous because, like I said, the USD is the world's reserve currency. Countries across the globe rely on the dollar's strength. So we have a problem here. And the thing is, no matter whether candidate A or candidate B won, this is much bigger than that. Regardless who won, it's much bigger than that. We're too deep in the hole. No president can fix this. No amount of money can fix this. We're too deep in the hole to dig ourselves out. And actually, we're digging the hole deeper, not trying to find a way out. We literally are digging the hole deeper, but nobody has. They have to. Think about it. If you wanted a shot at the election, you have to say this $1 trillion stimulus word, or no one's going to care. They're not going to want, and regardless of the consequences, these presidents know what it's going to do to the dollar, but what are they going to do? Just not feed the people? Just not give people money that they are in dire of, that, they're severely, that they have to have? Think about it. They're like a dog backed in a corner. You have to give this money out. You have to give the money out because people need it. People have been out of work for months. You have to give it out, but you know what that's going to do to the dollar. What are you going to do? Not give it out and say, oh, we need to save this money because... No, they have to give it out. So they almost know what they're doing. They know what's going to happen, but they have to feed the people right now. You're going to get a quick buck, but at what cost? So now that the global economy has entered a slump, the stock and foreign-owned dollar-denominated securities in dollars is likely to be reduced because the dollar is over-owned by foreigners for the evolving trading conditions. So, and you have countries like China's already decided to reduce their preference for U.S. dollars. Countries are already opting out the U.S. dollar being their currency. Some people are turning to cashless nations. Some people are using Bitcoin. Some countries using Bitcoin as their sole form of money. So let's keep on going. They talk about further consequences. I mean, there's a lot of consequences. I mean, there's definitely so many things. Like I said, there's 100 reasons why I could tell you to invest into gold and silver. Not many reasons why you shouldn't. I can tell you 100 reasons why you shouldn't invest into stocks, and not many reasons why you should. I mean, stocks are pegged to the dollar. The dollar's going down, so stocks are going to go down. It's like switching seats on the Titanic, right? So, and if you think of a recession / depression, you think of what's happening right now, dollar crashing. What else? What's the other word that goes with it? Stock market crash. So, the speed of the monetary, and now we're talking about some good stuff. I'm probably gonna summarize a lot of it because they're probably gonna basically say what I'm about to say just without having to talk about all this or read all these paragraphs. So, before the pandemic, we knew the dollar was going downwards. I've been making videos on this for 3-4 years now, that the dollar is collapsing. We knew this. But here's the thing. The pandemic sped everything up times 10. We didn't know there was going to be a global pandemic. This pandemic cut probably 10, 20 years off of what was due to come. The dollar was going to collapse, probably not for another couple decades. But now the dollar is going to collapse much, much, much sooner, and now people are caught off guard. Which also means we have to be on our A game, we have to be on our toes, because that also means that our stacking strategy is going to come to light much faster, where we have to make some critical decisions that we wouldn't have had to make for a while down the line. So here we're talking about the replacement for fiat currencies. So they're talking about what these policies would be. Once the dollar awakens, or the dollar is destroyed, people awaken. It's not prices. The prices are rising. Purchase power is falling. Currencies are likely to be swift. And it's impossible to tell when a collapse will happen. That's definitely true, especially with a country like America. So they're talking about the two options are, metallic monies, which over millennia people have always returned to when, the countries are failing. So we would also have crypto. Crypto may be hastened by the end of the fiat currency by educating important sections of the public and about consequences of monetary debasement. So that's definitely an option. The cheerleader for cryptocurrencies is Bitcoin, whose ledger is beyond control of governments. There is no bank of Bitcoin. There's no Bitcoin police. That's also dangerous for people, though, because if people get, scammed, get robbed, get their stuff stolen, or even just make a mistake and send their Bitcoin to the wrong address, their money's gone. Their Bitcoin is gone. And there's no one that can fix that. It's gone forever in the blockchain. So here's the thing. Well, I can't tell you what or how this could work, because Bitcoin isn't a stabilized price. It changes daily. So how could we have a form of money where every day the value is all over the place? I mean, there is coins, there's what's that coin called? That's pegged to $1. I haven't checked out altcoins in so long, but there is one cryptocurrency. The name of it's on the tip of my tongue. There's one cryptocurrency that is pegged to the dollar, right? And that would be something that to be looked at, because there would be a stable price. But that's not the coin I think would take over, right? The coin I think would take over is a altcoin called Ripple. Now you might have heard of Ripple. It's XRP. That's what the three letters are. But why Ripple, you would say, Silver Slayer? Well, this is why. Ripple will probably be the new form of money, or something very close to it, something branched off of it. And it's because central banks own Ripple. So, Slayer, you're telling me that a decentralized cryptocurrency is owned by a central bank? Yes, that's what I'm telling you. Ripple is owned by a central bank. So the reason why banks hate Bitcoin and all that is because they can't control it. But if a bank is in control of it and can control it to some degree, then we have a bridge from the rebellious world of crypto to the central banks, and that could be game changing, right? But if it isn't Ripple, it would be something like that, where there's a central bank or someone that can control the crypto, and then stabilize it and make it the new form of money. And it would be very beneficial because it is digital. You can. It's just very. There's a lot of pros and not many cons. But I mean, the cons are pretty serious, though, right? The cons are pretty serious. These wallets get hacked, exchanges get hacked. People steal millions of dollars in Bitcoin all the time off some of these exchanges. I mean, there's definitely, it's in a very rough draft stage, and people would have to do a lot of fixing to make this a thing. But who knows how much time we have, so I don't know what would happen. I mean, obviously, I'm not a time traveler, so who knows what would actually happen. But these are some of the educated guesses. These are some of the theories that are pretty accurate when you're looking at the reasoning why. Put it that way. Anyways, I'm going to wrap this video up. Hope you enjoyed this video. Links in the description. If you thought this video was educational, informational, at least entertaining, make sure to smash the like button. I post daily videos. Go check out the video I posted earlier today. It's critical. All this information you got to know as an investor. If you don't know this stuff, then I'm pretty confident that you're not going to be as successful as people that are eating, that are breaking down this type of information. It's so important. So thank you for tuning in. If you've stuck around this long in the video, then kudos to you. I'm sure you're a great investor, and I'm sure that you have a very good strategy, because that means you're willing to learn and have an open mind and stick around. So thanks for tuning in. Appreciate you guys. This was Silver Slayer. See you guys soon. Peace.